The rand stabilizing a little bit this morning, so trading around that 6.99, 7 rand level, going up to 7 rand 4 cents yesterday, but really again seeming to track the weaker euro.
Indeed, the rand's performance is remaining a function of the euro movements against the dollar. Yesterday we saw the rand weakening in sympathy with euro depreciation, but this weakening stopped the moment the euro recouped some of its gains against the dollar. Excuse me, so we expect the rand to remain more or less in the range of 706. However, that hurdle seems to be quite stubborn, and if that hurdle is breached to the top side, we could see 717 remain in target for the near term.
At the same time, we've had those commodity prices also coming under pressure, with the exception of the gold price, which has firmed up a little bit. We had preliminary PMI readings coming out of Europe and also China, and they're really pointing to a slowdown in manufacturing growth on those continents. So more pressure coming through for the rand as well from that side.
Indeed, but currency participants are also very worried about the debt situation in Europe, particularly on the back of the fact that Italy's credit rating outlook was downgraded yesterday, as well as the fact that the political wrangling in Spain on the back of unpopular austerity measures. And due to this, we saw global equity markets selling off, and volatility levels also started picking up. And this leaves the rand really vulnerable to global risk aversion as well. As far as the PMI data is concerned, we saw some softening from China as well as the European region. So we do expect this to continue going forward on the back of the fact that the cooling off is starting to take effect. We saw China tightening its monetary policy over the past couple of weeks, and that's really showing some kind of effect that the government has put into place to rein in inflation.
So if the rand's following the euro weaker against the dollar, how's it faring against some of the other emerging markets and commodity-based currencies? Are they also coming under similar pressure?
They are coming under similar pressure, but we're also seeing the rand remaining above its 200 moving day average against the dollar, and this is really implies that the favor is this implies that the momentum is in favor of rand bears going forward. We would therefore sell into rand strength.
Well, we have the South African Reserve Bank's monetary policy review coming through today. This comes just a couple of weeks after we had that MPC rate decision where they decided to hold the repo steady at 5.5%. What's the market going to be looking for in this? Will there be any further indication on the Reserve Bank's view on inflation going forward?
I think if we recall that the tone of the MPC was rather weak, rather hawkish. And I think the nuances that will come out of their monetary policy review is what we could possibly be looking for. I don't think they will change their outlook that they have indicated. So if they do indicate a further hawkish stance, we could possibly see the Reserve Bank hiking rates sooner rather than later. However, Standard Bank's view is for interest rates to remain on hold for this year, with a tightening in monetary policy only in the first quarter of next year.
Also, the South African Reserve Bank's leading indicator being released today as well. What would the market be looking for in that release?
The data came out slightly lower than the previous month. We saw the data come in at 135 from 136 points. The 136 points did mark a high in the data, but we are expected to see some softening in the leading indicator going forward on the back of the fact that business confidence and manufacturing data has been softening over the past couple of months. So a slight weakening in that leading indicator.
And just to repeat, we have that rand trading around 6.99, 7 rand this morning. Where to from here would you expect for the weakness to come through, or do you think we could see a bit of a relief rally for the rand?
I think some weakness could come through on the back of the fact of the Eurozone debt concern. So we could see a breach of 706, as I mentioned earlier.